It's time to talk business. Nigeria's public debt burden may hit 77 trillion naira if the National Assembly approves the request by President Muhammadu Buhari to restructure the Ways and Means Advances. The Ways and Means Advances is a loan facility through which the Central Bank of Nigeria finances the shortfalls of the government's budget. Director General of the Debt Management Office, Mrs. Patience Oniha, disclosed this during the public presentation of the 2023 budget organized by the Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed. She, however, noted that the debt would be 70 trillion naira without 5 trillion naira new borrowings and 2 trillion naira promissory notes, even as the federal government spent 5.24 trillion naira servicing debts in 2022. Let's stay with the public presentation in the nation's capital as the heavy borrowings to fund the country's budget will be reduced considerably this year with the removal of fuel subsidy payment by June this year. Finance Minister Mrs. Zainab Ahmed made this known at the public presentation and breakdown of the 2023 budget. Well, the minister is also positive that the budget's early passage will boost effective implementation of projects across the country, as well as aid the incoming administration's takeoff. Our correspondent in the nation's capital, Lara Folayo, tells us more in this report.
It's the day after the president gave his assent to the 2023 budget. A breakdown is now being presented to the public. Recurrent non-debt spending is estimated at 8.3 trillion, and this includes 200 billion naira for the social investment program. Capital expenditure of 6.46 trillion, which is 30% of total expenditure, is 3.5% lower than that of the preceding year. Debt service at 6.31 trillion is 29% of total expenditure, which is 71% higher than 2022's figure, including interest payment of 1.2 trillion for Ways and Means, which is the federal government's borrowing from the Apex Bank.
We have been able to consistently provide support where support is needed. Of course, the consequence of that is we have had to borrow more than we would have if things were working very well. But we are convinced that reflating the economy is the right measure to take.
While the debt is growing and there's new borrowing, debt has been managed under a public debt management strategy, which is a public document. While on the other side, extremely important, revenue is receiving significant attention.
Revenue totaling 10.49 trillion is available to fund the budget. The budget has a deficit of 11.34 trillion, representing 5.03% of GDP. The deficit is to be financed majorly by loans. 22% of projected revenue is expected from oil-related sources, while 78% is from non-oil sources. The fiscal authorities say oil revenue projections for the 2023 budget are feasible. The payment of fuel subsidy is expected to end by the end of June this year.
We're also going to be exiting fuel subsidy by the middle of the year. So it will mean more revenue accruing to the Federation. Subsidy cost is a cost to the Federation. It eats up into the oil and gas revenue.
The electronic money transfer levy, for that there's a total of 132 billion naira provided for the entire federation, of which the federal government share is 50% less cost of the collection. But there is still nonetheless something called stamp duty, but that doesn't amount to much.
Highlights of the presentation show 1.88 billion was released as capital vote in the 2022 budget, while 12.87 trillion was the total actual spent.
The 21.8 trillion naira budget for 2023 is 20% higher than that of 2022. With the theme budget of fiscal consolidation and transition, it hopes to put in place fiscal viability as the nation gears up for another administration taking over its economic affairs. Lara Folayo, TVC News, Abuja.
Let's turn our attention now to other stories as the Central Bank of Nigeria, that's the Apex Bank, says it will bring up a regulatory policy framework for the implementation of cryptocurrencies in the country. The Apex Bank disclosed this in a report tagged Nigeria Payment System Vision 2025. The banking regulator had earlier banned crypto-related transactions in the country and the banking system. Meanwhile, economists and experts fought at the apex banks a consideration for the stablecoin as ill-timed, considering the failure of the e-naira. Recall that the apex bank had banned cryptocurrency-related transactions in the country while claiming that digital currency was used for money laundering and terrorism. Following the malicious and misleading online publication, which made several false claims concerning the recent sale of the federal government's interest in Polaris Bank Limited, the Central Bank of Nigeria is reiterating that the divestment from Polaris Bank is an institutional decision supervised by a committee comprising senior representatives of AMCON and CBN, coordinated through reputable legal and financial advisors, approved by the respective leadership and boards of the two institutions. Director of Corporate Communications of the Apex Bank, Mr. Osita Wanusobi, in a statement notes that at no time did any other party make a higher purchase offer as falsely claimed by the online publication. He explains that the divestment was executed based on the relevant laws, global best practices for bank resolutions, requisite regulatory approvals, adding that Hills's binding offer involved an immediate upfront consideration of 50 billion naira for responsibility for the debts of 1.305 trillion naira owed to AMCON, essentially a total purchase consideration of 1.355 trillion naira. Mr. Osita further reaffirms that the CBN remains resolute in pursuing its mandate to promote a safe and sound financial system in the country. Let's turn our attention now to global markets as Asian shares rose today on hopes by investors for China's emergence from the COVID-19 pandemic, while the dollar stayed under pressure, even as the U.S. Federal Reserve had a warning against markets' bets on interest rate cuts this year. MSCI's the broadest index of Asia-Pacific shares outside Japan rose at 1% to touch a 4-month high morning trade, while Hong Kong Hang Seng's index rose at 2% to a 6-month high. Wall Street indexes fluctuated yesterday before closing with modest gains, but futures struggled in Asian trading. The S&P 500 futures is down at about 0.4%. Away from global markets, following the December monetary policy meeting, the Federal Reserve has decided to raise interest rates by 50 basis points. That's according to the latest reports from the Apex Bank. The report also shows the target range for the federal funds rate was raised to 4.25 to 4.50%, the highest level in 15 years. This is a slowdown in the pace of rate hikes after 4 consecutive 75 basis points increases. While the outcome of the monetary meeting it reinforces that the Federal Reserve is likely to continue raising interest rates. Officials anticipate that ongoing rate increases will be appropriate to achieve the objectives of maximum employment and price stability. Well, in Taiwan, the country's Foxconn, the world's largest contract electronics maker, says revenue in December dropped by 12.3% year-on-year after production problems related to COVID-19 pandemic. Controls at the major iPhone factory in China's Zhengzhou returns for the electronics maker fell drastically. But according to the latest report, production has returned to normal. As of 30 December 2022, the plant was shipping at 90% of the peak capacity forecast at the start of last year. Let's wrap things off now with crude oil prices on the international market as it rebounded today amid dollar weakness and as investors emerged to buy dips after 2 sessions of sharp losses through economic concerns, capped by recovery. U.S. West Texas Intermediate crude rose today to sell at $73.54 per barrel with an uptick of 0.96%. Brent crude futures also experiences an upsurge of 0.86%, selling at $78.51 per barrel. Bonnet Light experiences a price decline of 0.04% to sell at $77.61 per barrel. The OPEC basket crude oil dealers are offering $81.29 per barrel with an uptick of 0.18%.